So if you're thinking about getting into digital assets, like Bitcoin or Ethereum, there are a few ways to go. You can buy the coins directly, sure, or maybe use an ETF. But then there's this wilder path. Buying stock in a public company that's basically decided its whole reason for being is to act like a giant leveraged vault for crypto. Yeah, we're talking about companies whose stock prices are just completely tied to the daily drama of the crypto markets. It's intense. I mean, just look at Strategy Inc., MSTR. That's the big Bitcoin proxies, 52-week range, roughly $220 up to $542. Pretty volatile. But then you look at Bitminer Immersion Technologies, BMNR, the Ethereum challenger. Whoa, it went from like $2.76 to $161. That's staggering. That huge difference, that instability, that's exactly what we want to dig into today. Welcome to Everything You Need to Know About Finance. We're doing a deep dive, putting MSTR and BMNR side by side. We want to understand not just what they hold, but how their, frankly, bizarre financials actually work. And crucially, why investors seem willing to pay such a premium for these stocks compared to just holding the coins themselves.
Okay, just a quick reminder up front, as always, this is purely a factual look at public company info and reports. It is absolutely not financial advice. We're just here to unpack things, make sense of the complexity. And hey, if you find this kind of analysis interesting, please do hit that like button and subscribe. It helps us out.
And it is complex, isn't it? That's what makes it so fascinating. We're not just comparing two firms that happen to own some crypto. These are huge corporate pivots we're looking at. So yeah, our mission here is to cut through the noise, look at their treasuries, their strategies, and really try to answer that core puzzle. Why do these stocks often trade at, 30%, sometimes even 40% above the value of the crypto they actually hold? What are investors really buying into here?
Okay, let's break it down, starting with the established player, Strategy Inc., MSTR, the Bitcoin Titan.
Yeah.
But it wasn't always like this, right? It started way back, 1989, that a pretty standard enterprise analytics software company. Kind of boring, really.
It's your traditional business.
Exactly. But then, around 2020, everything changed. That old software business, it's almost like a footnote now. Today, MSTR's main game is being a massive institutional holder of Bitcoin, period. Their stock price is almost entirely driven by the price of Bitcoin and how they raise capital, often using things like convertible debt, specifically to buy more Bitcoin.
And they hold a lot. The widely reported number is around, 640,000 BTC now?
Yeah, something like that. This software revenue is just tiny compared to their market value. For all practical purposes, they're like a leveraged Bitcoin ETF that happens to still run a small software side hustle.
It's a pretty clean pivot, strategically speaking, even if it seems dramatic. Now, BMNR, Bitminer Immersion, it's a similar kind of story, but with some key differences, and it's anchored around Ethereum. BMNR is a smaller outfit. Historically, they were more in the weeds of crypto mining, hosting for others, selling equipment, the operational side.
Right, the grunt work.
Exactly. But recently, they made their own huge strategic shift. They started piling up a really substantial Ethereum treasury. Public filings mention holdings in the millions of ETH. I think one recent PR cited around 3.24 million ETH plus cash, and their stated goal, to become the go-to public company for Ethereum exposure.
But here's a crucial difference from MSTR. Their plan isn't just holding ETH. It's heavily focused on generating yield through ETH staking. That's a big part of their future revenue model, unlike MSTR's holding. Interesting. So one is pure leveraged holding. The other is holding plus trying to generate income from the asset itself through staking.
Precisely. That staking component is key to understanding BMNR's potential and its risks.
Okay, let's dig into the financials then. The scale difference is pretty stark, isn't it? That must impact risk. MSTR is the big fish here.
Right.
Large cap, NASDAQ listed, market cap around what, $83 billion. It has that institutional feel, liquidity.
Definitely the established player.
Whereas BMNR is much smaller, historically mid-cap, trades on the NYSE American, and its market cap just swings wildly depending on crypto news or announcements.
Yeah, that smaller size makes it inherently more volatile, more sensitive to specific news, or even who's buying large blocks of shares, much higher idiosyncratic risk.
So this brings us to what you call the profitability paradox. This sounds important.
It really is. You absolutely have to grasp this to understand these stocks. Let's look at MSTR's numbers, say, from Q2 2025, their software revenue. Modest, pretty standard, but then you see the headline, net income, $10.02 billion.
Wow, $10 billion.
$10 billion. That gives them a net profit margin over 1,000%, a year-over-year change of nearly 10,000%. Insane numbers. But you got to ask, where did that $10 billion come from? Did they suddenly sell a revolutionary new software product?
I'm guessing no.
Nope. Almost all of that spectacular profit is just paper gains. It's the result of accounting rules, specifically U.S. GAAP. When the price of Bitcoin goes up significantly during a quarter, GAAP forces them to mark their holdings up on the balance sheet and recognize that unrealized gain as income.
Okay. So if Bitcoin rockets, their income statement looks amazing, even though they haven't actually sold any Bitcoin or generated cash from operations.
Exactly. And the flip side is true too. If Bitcoin crashes, they have to recognize an impairment loss, which can make them look disastrously unprofitable, again, on paper.
So it's not cash they can actually use to run the business or pay dividends.
Precisely. Think of it like owning a house. If your house value jumps on paper, you feel richer, but you can't spend that equity unless you sell or borrow against it. It's an accounting item for MSTR. Now, to their credit, they manage their leverage relatively well. Their debt-to-equity ratio is around 0.16, which is manageable, even though they use that debt to buy more BTC.
Okay, that makes sense for MSTR. So what about BMNR's financials? I imagine they don't have that same massive accounting boost masking the underlying operations.
You got it. BMNR's numbers look much weaker by traditional metrics because their crypto holdings haven't generated those kinds of gap gains, or their operational side is more visible. Looking at their Q3 2025 data, for instance, their operating revenue was tiny, like $2.05 million, and they were actually unprofitable from operations, with a net income around a minus $622,000. Standard metrics look poor. Return on assets was negative, about 99.65%.
Ouch.
Yeah. And crucially, their debt-to-equity ratio is much higher, around 0.9. That indicates significantly more leverage, more risk, and more reliance on ETH prices going up or finding cheap capital.
So the core difference seems clear. With MSTR, you're buying into massive accounting swings layered on top of a leveraged Bitcoin bet. With BMNR, you're getting crypto price movements plus a small, currently unprofitable mining hosting business, but with that potential kicker from ETH staking.
Yeah.
And higher leverage, higher operational risk.
That's a perfect summary, which brings us right back to that central puzzle. If MSTR's profits are largely accounting fiction and BMNR's operations are weak, why on earth are investors paying such a huge premium for the stock compared to just buying Bitcoin or Ethereum directly?
Right. This is where it gets really fascinating for me. This whole premium to net asset value, or NAV. Can you break down what NAV means here?
Sure. NAV in this context is pretty straightforward. It's basically the current market value of all the crypto, the Bitcoin for MSTR, the Ethereum for BMNR that the company holds, minus all their debts and other liabilities. It's like the liquidation value of their crypto per share after paying off what they owe. If the stock price is higher than that calculated NAV per share, it's trading at a premium. And right now, MSTR usually trades around a, say, 30% premium to its Bitcoin holdings, but BMNR, lately it's been even higher, sometimes hovering around a 40% premium to its ETH holdings.
40%?
Yeah.
On a company that's operationally losing money, that seems, well, it seems nuts on the surface. Why pay $1.40 for $1 worth of Ethereum?
Yeah, it looks irrational if you're thinking purely fundamentally, but it's not really about that. It comes down to market mechanics and accessibility. There are maybe three main drivers here. First, tax efficiency. For a lot of people, especially institutions or folks using retirement accounts like IRAs or 401k, holding crypto directly is complicated or impossible from a tax or regulatory standpoint, but buying a NASDAQ or NYSE stock, easy.
So it's a way around those hurdles.
Exactly. Second, liquidity and ease. Buying MSTR or BMNR is often just simpler and faster through a standard brokerage account than setting up a crypto wallet, dealing with custody, and so on. And third, probably the biggest driver for some, leverage. Buying these stocks allows certain traders to use traditional margin accounts to get leveraged exposure to crypto. Getting leverage directly on crypto can be complex or expensive. Doing it through equity margin, often easier and potentially cheaper. They're essentially paying a premium for easily accessible, equity-based leverage on crypto.
Okay, that makes more sense. The premium is the price of convenience, tax structure, and leverage.
Pretty much. And that higher 40% premium on BMNR, that likely reflects much stronger speculative demand. Investors betting heavily that Ethereum's price will surge, maybe due to staking or other developments, and BMNR is the main public stock to ride that wave.
Got it. Let's talk risk then. For MSTR, obviously the Bitcoin price dropping is the big one, but you also mentioned dilution risk.
Correct. MSTR is constantly raising capital, often through convertible debt or preferred stock offerings, precisely to buy more Bitcoin. While that leverage magnifies gains when BTC rises, every time they issue new shares or debt that can convert to shares, it potentially dilutes existing shareholders. Their debt equity is okay now, but it's a constant balancing act. Analysts seem to understand this strategy. They're generally cautiously optimistic on MSTR, recognizing its scale. The average price target is around $549, reflecting that established position, but also the inherent BTC volatility.
And for BMNR, you highlighted higher idiosyncratic risk. What does that entail beyond just ETH price swings?
Yeah, it means risks specific to the company itself. Because it's smaller, its stock price can swing wildly just on company news, like announcing a new ETH purchase or a staking update. There's less of an institutional cushion, and the big one is validation. Investors really need to do their homework to confirm the custody arrangements and audits for that massive pile of ETH BMNR claims to hold. Is it secure? Is it really all there?
Right, governance risk.
Exactly. With a smaller company, there's just inherently more governance and execution risk. Can they actually manage that huge treasury effectively? Can they deliver on the staking strategy? Despite these higher risks, some analysts rate BMNR a buy with price targets around $60. That just screams high risk, high reward, heavily tied to the whole Ethereum growth story.
Okay, so wrapping this up, we've really unpacked two very different beasts here, haven't we? On one hand, you've got MSTR. It's the big, relatively liquid way to get pure leveraged exposure to Bitcoin through the stock market. But its reported profits are driven by those wild, non-cash accounting swings.
The established proxy.
Right. And on the other hand, there's BMNR. It's the smaller, much riskier, more speculative bet focused on Ethereum. It's aiming for dominance in ETH exposure and staking yield, but it's built on top of an operation that's currently losing money.
The challenger with operational hurdles but potential staking upside.
Yeah. So for traditional investors looking at fundamentals, both probably look pretty challenging, maybe even uninvestable. But for crypto folks wanting easy access, leverage, or maybe tax benefits, these stocks are seen as almost essential tools.
And looking ahead, that's what's really going to be fascinating to watch. The strategic difference is stark. MSTR's future is almost entirely tied to the price of Bitcoin and their skill in raising capital cheaply to buy more. It's a pure, leveraged price play. BMNR, though, is trying to build something else on top of that price exposure, actual operational income from ETH staking. So the big question is, will BMNR's potential yield from staking eventually create a more stable, perhaps compounding growth in its net asset value? How will that compare over the long term to MSTR's pure, highly leveraged holding strategy? That dynamic staking yield versus pure leveraged exposure could fundamentally change how the market values these two crypto proxies down the road.
That's the key takeaway, isn't it? Yield generation versus pure leverage. Definitely something to keep a close eye on. Well, we hope this deep dive gave you everything you needed to know about MSTR and BMNR, these really unique players in public finance. If you found this breakdown useful, please do check out our latest episodes. We're always digging into complex topics like this for you.